Forex Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video, we're going to talk about peak formations. We're going to talk about ADR, and we're going to break down these charts so you can basically do it yourself. So as you know, we're doing a year-long series of trading with a purpose, and we're essentially doing pound USD, pound JPY, gold, NAS 100. So we're going to break all four of these charts down, obviously. So let's go ahead and just start out with a popular one, which is pound USD. All right. So here we have a fresh pound USD chart on the 1 hour chart. All right. So let's break down how can we implement peak formations into this particular chart. Now, the easiest way to start out, okay, is simply by just going to either the low or the high of the actual chart. So in this case here, we're talking about this area here. So immediately we know that this area is going to be a peak formation low. So we know that off the rip. Okay, now the question becomes, how do we go from here and build out or even build backwards? Okay. So what I'm going to do here is, just by looking at this chart, I'm going to go ahead and start filling out some of the boxes, and then I'm going to go ahead and explain how I got to filling out the boxes. So just give me a second here and just enjoy the process. All right, so we're going to talk about just this section here because this is the most relevant to us, as this is where price action is right now. So how do we get to these boxes here? Well, for me, here's what I'm thinking. Now, granted, just keep this in mind, guys. Like, I do this every day. I've been doing this every day since 2011, right? So this is something that I know like the back of my hand. I can do this on any chart, doesn't matter what chart it is. All right, so just keep that into perspective. All right, so the first thing you need to look at is essentially we're looking for peak formation highs, peak formation lows, failed resets, and resets. Okay, those are essentially what we're looking for. So peak formation highs, peak formation lows, and then FRs, which are failed resets, and then resets themselves. Okay, so these are the main things that we're essentially looking for. Now, how do I know which is what? Well, that completely depends upon the ADR of the current cycle. So if you guys remember, okay, what is a cycle? Right, a cycle is essentially, something that could look like this, right? Just basically a peak formation high to a peak formation low. That's one cycle. Okay, now every cycle has its own ADR. All right, so what I mean by that is, let's say that this cycle here that you see had a ADR of, let's say, 100. Okay, so 100 is the ADR, the average daily range of this pair during this cycle. Okay, and then now let's say we have essentially another cycle happen. Okay, here's the next cycle after it. Just because this cycle, this previous cycle had 100 ADR, doesn't mean that the next cycle is also going to have ADR, the same ADR. So essentially this other cycle here could be a cycle of 150. Okay, so you could have one cycle of 100, the very next one could be 150, or it could be 125, or it could be 110. All right, and that's just essentially the average daily range of each day for this pair, because obviously every day it keeps changing its daily range. Okay, so one day it could be 100, another day it could be a 125. You're taking basically the average of the ADR here to complete the cycle. So if the average ADR is essentially 100 per day, okay, what's 3 times 100? 3 times 100 is what? So 3 times 100 is going to give you 300, right? So typically what you're looking for in an ideal perfect world is essentially from here to down here. Okay, you're looking for 300 pips. In a perfect world, you're going to have 3 times ADR is what gives you a cycle. Okay, now obviously as things evolve, as price action evolves, as markets evolve, okay, this is not necessarily 100% true right now. Okay, from so much backtesting, so many different data points that we've been able to look at, the actual cycle now is anywhere from 2.5 times ADR to 4.5 times ADR. Okay, this is what now equals a cycle. Okay, so back in the day it was on point 3 times ADR. Over time it's adapted and changed from anywhere from 2.5 times ADR to 4.5 times ADR equals 1 cycle. Now that we have those things as a premise, okay, let's put on some ADRs here so we can start to see what we're talking about. All right, so kind of zoomed in to where the peak formation is to the first peak formation high. Now I want you guys to start taking a look at the ADR here. 109, 109, 112, 113, 114, 112, 109, 113. So to me, the average ADR here is somewhere between 109 to 113 essentially. So I'm just going to say 110. Okay, is the average ADR for this cycle. Now if you take 110 times 3, that gives you about 330 pips. Okay, so all we're going to do is we're going to measure this. And so as you can see here, we're about 422 pips on this cycle. Well, clearly that's about 100 pips over, right? So if we take 422 and we divide that by the average ADR, which is around 110, okay, that gives us about 3.8 times ADR. Now you may be asking yourself, well, why is it that we're going 3.8 times ADR? Why not just go to, the 300 and some odd pips that would require just a 3 times ADR, right? Well, that's like 330 pips. Well, if we start to bring in the things that require, okay, an actual cycle to be full and complete, all right, what are those things that require a new peak formation to be formed? All right, so let's just talk about peak formation needs these things in order to essentially be good. The first thing is obviously you need movement of 2.5 to 4.5 times ADR. That's the first thing, right? Second thing is you need a 1350 EMA cross. Okay. Third thing is you need a one-time ADR move away from the new peak formation. Okay. And then you need a break of structure, a BOS. All right, so these are the things that you need in order to have a peak formation form. Okay, so if we start to count out from the bottom here, 330 pips, that's somewhere, you know, around here, right? Somewhere around this area. Do we have any kind of crossover? Do we have any of those things that happen? No, right? The first major crossover after 3 times ADR is essentially up here where I have it. Okay, there you see the crossover happen here on the 1 hour time frame. What we have here, okay, is from peak formation low, which is this here, we have price movement that goes up 3.8 times ADR, and then is when you get a crossover. If you get a crossover here, let's say, I don't know, let's say if this ends up being a crossover, is that enough for a full cycle? No, that's below, you know, the requirements of 2.5 to 4.5 times ADR. If you were to gotten a crossover here in this area, could that have been a new peak formation? Well, let's measure it out real quick. So 270. So let's say 270. If you take that and you divide it by the average of, you know, whatever, 110, you're getting about 2.4 times ADR. So no, that would not be enough for a full cycle. So again, the only option that we have is here. Okay, so this is a new peak formation high here. All right, and so from there we now obviously have a bias, right? Because once you have a new peak formation, now you have a bias to start looking for type 1s, 2, 3s, 4s in the London session, or continuations or reversals in the New York session. Okay, so we're essentially looking for sells, right? That's the bias. Now, what happens? Obviously, price goes down and then immediately basically retraces back up. Okay, now this move here from here to here is 275 pips. Okay, so 275. What is the average ADR for this section? Okay, well, we're looking 115, 115, 114 to 109 here at the very bottom. So let's just keep it a buck. Let's say 114. That goes 2.4 times ADR. Okay, so this doesn't qualify for a peak formation, because in order to, you know, to complete a peak, a new cycle, essentially you need, you know, at least 2.5 to 4.5 times ADR. So that does not give us a full cycle. So what does it give us then? Well, essentially you're going to run into a situation where that's either going to lead to a reset, or is it going to lead to a failed reset? What's the difference? So here's the difference between a reset and a failed reset. So first, let's just say a reset, since it's the simplest to understand. Okay, so let's say that market basically wants to go down. Let's say market makers want to move price down by, let's say, 600 pips. Okay, and let's say in order to do that, let's just say that this right here, from here to here, let's pretend that's 600 pips. All right, in order to move down here, obviously we know that they're limited on how much they can move the market. being that pound USD, as you saw on average, is anywhere from 100 to 115 or so, give or take, pips. We're just to make the numbers make sense. Let's just say it's averaging about 100 pips per day. Well, you can't move 600 pips in one cycle, obviously, right? That's more than 4.5 times zone ADR. So you're gonna have to split that up into 2 cycles, right? So basically cycle 1 goes from here to here. That's 300 pips. And then cycle 2 is essentially from here to here. That's another 300 pips. So effectively, they moved the market 600 pips, but they split it into 2 cycles. So all a reset allows market makers to do is just to extend the movement down to another cycle. Okay? That's all a reset is. So a failed reset is essentially when you have this. You still have your full cycle, but what happens? So you have your full cycle that's completed here, right? You have your peak formation high and your peak formation low, but then you get a price movement back down again, basically retesting the brand new peak formation low that was just created. Okay, so why is this happening? Well, essentially why this is happening is initially when market makers created the cycle, okay, and they're moving away and they're wanting to go back up, they see that they do not have enough orders, okay, to actually go up and do the move that they want to do. So they need more people, basically more traders to start selling, so they could cover the other half of the buys. Okay, so prices come back down again to retest the low. Okay, when they come back down to retest the low, it triggers more sell orders to start popping off, which obviously they take the other side of it, which is the buy order. That gives them the orders that they need in order to start making the original move that they intended. So all about the failed reset, all it is essentially is a way for market makers to grab more orders before continuing their original intended move. Okay, so back to here. So in this case here, this is essentially what happens. Okay, this right here is a failed reset, and you'll see here in a second why it's a failed reset. So price goes up and basically retest the previous peak formation high and then drops, right? Drops, crossover, more than 1 times ADR, break of previous structure, right? But here's what I need you guys to understand is the fact that look what happened when they went back up to retest the area, right? They went above the previous peak formation, right? And this is on purpose because there's a bunch of orders that are sitting on top of this. Okay, orders are sitting on top of every peak and every low in the market. So for example, there's orders that are sitting above this, there's orders that are sitting above this, there's orders that are sitting here, there's orders all over this. Okay, the major orders are going to be sitting above previous peak formations, above peak formation lows. All right, there's going to be orders that are sitting here. There's orders always everywhere in the market, but just to make it very simple for you to understand, okay, if we just take a look at this example here on this cycle, orders are going to be above here and below here. above here, below here. These are all orders, and orders, liquidate, whatever you want to call it. It's all the same stuff. You can call it market orders, you can call it liquidity, whatever. It's all the same stuff. Don't let the fancy names, fool you. It's all the same stuff. All right. But anyways, orders are going to be sitting all throughout each of the highs and lows, because us as traders, that is where we put our stops. That's where we put our orders. Okay. If you're a breakout trader and you're in a downtrend, right, where are you going to put your sell stop? You're going to put it on the low here where it breaks, right? You're going to put your order to sell right after it breaks. That's what breakouts traders do. Okay, if you're a trader that trades retracements on downtrends, right, which is nothing crazy to do. It's in every book you can read, right? You're gonna enter the trade on a retracement. Where are you gonna put your stop? You're gonna put it above it. I mean, that's just where orders are gonna be sitting, right? Because we all do this. We all do this. Okay, it doesn't matter who you are, how good you are, how good your strategy is. Everyone does this. That's all orders are. But what I want you guys to pay attention to is essentially what happened and why. If you look at this here, this peak formation high was taken out essentially with orders, and then starts to move back down again. So you think, okay, cool, we have another peak formation high here, because we obviously did not break and go higher. If it would have went higher, if this entire move would have went just continued higher and not had this retracement that crossed over again, this would have been an actual reset and you would have gone higher. Okay, so let's play this out now and see what happens. So we got peak formation high and we're looking for sells, and then we start to notice what happens. You start to notice we come down and then we start to move back up again. Well, essentially this right here, if you look at it from a bigger picture, all this is, okay, is this. On a daily time frame, all you see is this. Okay, so on a daily time frame, you see this. Okay, it's just a move down, up, retracement, and to move higher. That's all you see on a daily time frame. But on the smaller time frame, it breaks down like this. Okay, now obviously this, because price broke previous peak formation high, we know that this right here is a reset. Right, we know it's a reset because we don't have enough for a full cycle, obviously. And price reversed and broke the previous peak formation high. All right, so now we have a reset, we have a new cycle, okay, and we're looking for buys, right? And so we're just going to let this keep going, and then we'll talk about how much the cycle, this next cycle, is going to be, because you notice that from where we started down here, where we were in the 112s, 113, 114s, we're now in the 109s, 107, 98, 99. So the ADR is actually moving lower. Okay. So the point that I made earlier about every cycle being different is what you're seeing here. Okay, you basically see how from cycle to cycle the ADR changes, and you need to make sure that you adapt to that. Don't just assume that just because we went back up to the same area that it's automatically a peak formation high. So 109 through essentially 93. So pretty big range here of ADR. So we're going to go with about, the average is going to be somewhere in the 100 range. So if we measure this out, we're at 387. We know that's going to be well over 3 times ADR, so we know that that's going to be correct. So if we do, 100, you're looking at 3.8 times ADR. Again, that's going to be a peak formation high. So there's another peak formation high. We have the crossover, we have the 1 times ADR, and then the closest breakup structure is here, which is broken. Now I want you to pay very close attention to what happens, okay? And again, I want you to start paying attention to this. Look what happens. Immediately, once we get a peak formation high, the very next 2 days after, immediately huge push up. So for essentially 1 day, you'd be looking for sells, for sell setups, right? And then the very next day, you start to get this move back up. The aggressive move back up again, it's the very first telltale sign of a reset that's potentially going to happen, okay? And so obviously prices are going to continue to go higher, and this is a reset. I know you're probably going to have a gazillion questions about resets and failed resets and all that stuff. Don't worry about that just yet. We're going to have videos on just resets, and honestly, I've already made quite a few videos on resets as well. So, but I just want you guys to just follow with the peak formations first. So we're coming from a reset now, and we're basically back up to current price action. So you can see here that so far we've gone from 94, 92, 92, 87, 80, 79. So we're lowering essentially our ADR almost daily now, and it's getting smaller and smaller and smaller. Okay, now couple things to note. So am I expecting a peak formation high to form? Yeah, I'm expecting one to form, but until we get that to form, I'm still looking for buys. You're just being very cautious with the buys that you're looking for, because you know that you're towards the end of a cycle. That doesn't mean that you have to stop trading it, but it just means that if you're going to trade this, you just have to be very cautious. So in this example here, if you have this pair that's towards the end of a cycle, or because it's super extended already on a cycle, wouldn't it be better if to see if other pairs that you follow, that you like to trade, are just establishing a brand new cycle, like a new peak formation, or other pairs that are not overextended like this one, So while this is trying to figure out, like I was saying in the previous video, while this is figuring out when it's going to create that peak formation high, you could be trading other pairs that have just started a new cycle. Okay? Because at any point this could create a peak formation high, right? And all we would need it right now would be to have a crossover and then just break below this area of structure down here, and you'd have a new peak formation high. And then from there you'd be looking for sells at that point. Okay. Now, with that being said, if we just go back, okay, if we go back and we go back to this part here, let's finish this up here. So I can already tell you that this is a peak formation low, and this is going to be a reset here. All right, so you could see 97 to 100. So this is about, as close to 100 or so as possible. You're looking at 486 pips or so from that particular moment. So you're looking at, somewhere around 4.7 times ADR on this one. So super overextended, and you could see what happens when they get super overextended is you have a peak formation form. So this is a full cycle. Obviously, this we know that this is not going to be enough for a full cycle. It's too short. It's only 222 pips when it's averaging 94, 95. So we already know that this is definitely a peak formation low, and I can keep going back. Okay. If the cycle is about 95 or so, give or take, we're looking for somewhere 3 times ADR is about 285. So if you go back here, let's say, because I can already tell you that this is going to be something up here, this is going to be something down here off the rip. So we just have to confirm how big are these moves here. That's 462. Let's go back here. Yeah, so you can see these numbers are much lower here. So 91, 85. So let's just say then, let's just use like 86 just to get a reference point. So 258 is somewhere in this range here. So 258, if we start poking out here, you can see the closest one that we would have would be 340, 346. That would be right at 4 times ADR. And then from here down to here, it's only about, from here to here is 255. So 255, and then we're averaging what, about 90. That's about 2.8. So here's how this plays out. This is a reset up here. This is another peak formation low. Okay. And then this obviously is going to be a peak formation high. This is going to be another peak formation low. So we just did this entire chart here. Okay. Like this. And so this is essentially what you would do for peak formations. Obviously, I know that if you've never done this before, it's going to take, obviously some time. The easiest thing that I can tell you is, in order for you to get this, okay, all you have to do is literally backtest. If you backtest 1 year of pound USD, and you just backtest in the sense of putting these together, you'll be a pro. Okay, so literally go back to 2000, go back to January 1st, 2024. Okay, start from here. Okay, or even if you wanted to make it easier on yourself, this is a real easy way to start right here. Boom. That's a peak formation high. And you can literally start from that point on. Okay. Go back into replay. Okay. Just start with the little chunk here like this. And so you can see here, the average ADR is 66, 65, going into the 70s. So let's just say, just to keep it simple, 67. So full cycle 3 times ADR would be around 201. Okay, so let's just start from there. 201. All right, well, I can pretty much already tell you, here's a full cycle right here. This would be peak formation low. Okay, we already know that this is peak formation high. Okay, and I mean, just by the look of the fact that this went up and came back down, broke the low, you already know that this is a reset. Okay, that's a reset right there. All right, and then now we're just literally counting down the next cycle. Okay, we're just replaying. at this point. We're just letting it play out, and then you're paying attention. 70 is the average ADR. So we're looking for, if you just do the standard 3 times ADR, we're looking for somewhere around, 210 pips for a general 3 times ADR cycle. Okay, here is 265. Okay, so 265, divide that by your 70, you're right at 3.7 times ADR. So here is essentially another peak formation. There's another peak formation low, and depending on how this goes, this will either go higher or not. So you just had a break of the previous peak formation. The only question you ask yourself now is this going to be a peak formation high, or is it going to be a reset, right? So again, you just measure out 168. This is very likely going to be a reset because there's not enough. We're averaging about 70. 70 is about 210, so that's not enough. So this is going to be a reset. We're starting to average now into the 77s now or so, 76, 77. So let's just say 75 times 3, 225 is the next number essentially. And you just keep doing this. You just keep playing until you see a new peak formation. You just keep going. There's your peak formation right there. I mean, I could already see it. Okay, there you go. And you just keep going. You literally just keep going with it. But you do this. You start from January 2024. You play this all the way out through today, essentially through current day, and you'll be pretty freaking good at this by just doing one backtesting session on one pair. Okay, and this will translate essentially to any pair. It doesn't matter what pair. It'll translate to all the pairs. So here's what this looks like on higher time frames, so you can understand. On a 8-hour time frame, right? You can see it's literally just a pullback. They're just pullbacks on 8-hour time frame. Okay. Daily time frame, same thing. They're just pullbacks on a daily time frame, like I was telling you before. That's how you do peak formations on pound USD. Next video, we're going to do pound JPY. We'll do gold. We'll do NAS 100. So you're caught up on all the 4 pairs. All right. So that's it, guys. That is peak formations. All right. On pound USD. Hopefully this video was helpful. Hopefully it brought you some value. Do me a favor, like the video, share the content, comment below. How comfortable are you? With peak formations? By the way, if you're not comfortable with peak formations, or if you're the type of trader that, you know what, I don't want to do this. I don't want to do peak formations, right? Or anything like that. If you don't want to do that, that's perfectly fine. Join FXN Plus. I'll do it for you, and I'll show you the charts every single day, where the peak formations are every single day. So you don't even have to worry about it. You can just copy my charts. All right. But links for that are in the description. Again, guys, share the content, and we will see you in the next one.